This is the briefing for Friday, December 5th. The indices are paused. There's multiple time frame rotational patterns that they're in, which I'll show to you in just a few minutes. But for basically, this is Friday's recording, so there's a Fed announcement on Wednesday of next week, so we're likely to be stuck in this trading range until at least the Fed announcement. Then we can expect some volatility potentially Wednesday afternoon after the announcement, and then the press conference following that. And then, of course, there's always the chance that whatever direction the market goes in after the announcement and the press conference, it could be completely reversed the next day. So there's a lot of unknown uncertainty facing the market in the coming week anyway. You can see that this is about 4 to 5 days of rotation in a rotational pattern where the market was paused. In today's trading, this is the spiders on a 60-minute basis. The spiders broke out but are just really still paused just above this upper key reference area, which was resistance, which is now support. You can see in the last hour of trading, it came back down and tested that range or that key reference area, which is now support, and then bounced right off of it again. So there is some strength within the market, and I'll get to the internals in a second also. Same thing with the Qs. This is the Qs on a 60-minute basis. You can see about 3 days of rotation, then the breakout in today's trading, and then of course we've got this pause right at the upper extreme, right at the 625 half area. The support on the spiders is right at the 684 half area. And then, of course, the Russell was on a tear last week and this week. You can see that right through there. A little bit of a decline right through here, rotation down. And then, of course, this extension back up again. So the Russell is certainly showing some exuberance over what may come in terms of a interest rate reduction on Wednesday, but that is still yet to be seen. The internals are strengthening slightly, but really not anything to what you would expect to see if we're going to see a really good move to the upside and a continuation of this rally that we've seen. This is the spiders on a daily basis, and you can see the rotational pattern that they've been in for quite some time. Now, because we've been in this rotational pattern, it could be that we're going to see another rotation back down again. But this is going to be the key reference area here is going to be about the 690 area in the spiders. That if we break through that, then we are breaking out in a longer term time frame, which would then suggest the potential for a greater degree time and price move to the upside. On the other hand, we have to watch out for a false breakout, which would be determined by market internals not confirming the breakout move, or we could see some type of move back to the downside. It all depends on what happens on Wednesday and traders' determination of value and how that affects value, whatever that decision is. You can see volume is fairly low. This is volume in the spiders, and you can see this is 52-week highs minus 52-week lows. It's improving slightly, 261 shares, more positive than negative. But this is what's concerning me. This is market breadth. This is NYSE breadth. And you can see the divergence that's occurring as breadth is dropping overall. You can see price is moving higher right into this resistance area. This is net volume. Net volume is up volume minus down volume. So you can see how the up volume is declining. In fact, in today's trading, we ended up with a negative number. So there was more selling volume than there was buying volume, even though price held up as well as it did in today's trading. In the Qs, we're basically the same thing. Had a breakout here, false breakout that came. Then we had this rotation back down again. This area here, this area of 684, 685. I'm sorry, 584, 585. Pretty important area because it held right here, it held here, and it held here. And then we got this rotation back up again. So that's something you might want to just keep in your back of your mind. Should we get another rotation back down? If that were to be broken and the traders who bought this and really basically all through here and then bought this, if they don't defend that price, we could be in for some type of a greater degree time and price move to the downside. Volume flattened the Qs, but once again, look what happened with volume in the NASDAQ. I'm not sorry, not volume. This is breadth in the NASDAQ. You can see what happened here, that it has been declining for the last couple of days. Net volume in the NASDAQ declining as well. Not a positive for a potential breakout. Now, I should say this. I covered it a couple times in several of the briefings. It is not a statistical calculation. It is a psychological calculation that I use for myself. And remember, it is not statistical, but I always look at it that there's a 70% chance that when the internals diverge, that in other words, when price is going in one direction and the internals are not supporting that price move, that there's a 70% chance that the price is going to correct to the internals. That means there's a 30% chance that the internals could correct to support price. Typically, that happens around a news event. So we have a news event coming up on Wednesday, so it's going to be very interesting to see if we get a change in the internals to support what is the current rally in terms of price development, because the internals are showing some weakness, at least going into the close for today. In terms of the IWM representing the Russell, you can see the rotational pattern, false breakout to the downside here, then another rotation back up and testing this upper resistance area, 251, 252 area. Once again, look what's happening with breadth. Volume a little bit better, but still fairly low in the IWM, and net volume falling off pretty dramatically in the Russell. So basically, we're stuck, as you can see, in a daily rotational pattern. We're stuck in a hourly rotational pattern, and we're stuck in you can break it down. I use a 15-minute chart, but you can break it down in this rotational pattern. So we are in a rotational mode, basically in 3 different time frames. So a breakout in one time frame, such as the hourly time frame, is going to be a breakout in the daily time frame, and that's going to be the potential for a large move in one direction or another. On the other hand, or a breakout to the upside, I should say. On the other hand, if we break to the downside in the minute or the hourly time frame, then we're going to get a rotation through on an hourly basis down to test lower extremes, and then that would open up the potential to test this lower extreme. And if that's broken, then we've got to go longer term to see where the next levels of support and resistance will develop. Looking at where we are in terms of overbought and oversold, once again, as I covered in last night's briefing, we are neutral. This is the NYSE, so we are neither overbought nor oversold. The indicator is converging, which suggests a tightening of the market. Same thing with the NASDAQ. The NASDAQ is neutral. It's neither overbought nor oversold, but you can see that the indicator is beginning to converge together, which suggests the potential for a breakout move in one direction or another as the market tightens within itself. It's going to be a very interesting week next week, likely not to be too much trading within the first Monday and Tuesday, and then of course we'll have lots of volatility on Wednesday at the Fed announcement, and then potentially on Thursday morning as traders reevaluate 1, the press conference, and 2, the effect of interest rates on stock values. Have a great weekend, and I'll pick this back up on Monday for subscribers.